All right, good afternoon, everybody. How are we doing today? If I can just get a quick audio and video check to make sure we're coming through loud and clear. You can hear me and see me. Please just type it in there. Hey, Craig, how are we doing this morning, Craig? Or this afternoon? Hey, Stephen, Mike, everybody, good to see you. Hope your trading morning has gone well today. We doing our webinars a little bit different time frame today. I know we've done some evening ones, some morning ones, and doing a little bit different time today in the afternoon to make sure you guys have plenty of time in the morning to take care of all your trading here. So, hey, Ron, howdy from Fort Worth, Texas. How you doing there, Ron? All right, well, I'm going to get our recording going here today. We're going to kind of pick up on where we've left off. If you've been with us over the last several months and weeks, we've kind of gone through some Nadex binaries, we've gone through Nadex spreads, making sure you have a good understanding of both. And last week we talked about how to compare binaries versus spreads when you're looking at your trade setups and determining what's the better option for you, and determining risk versus reward and expected moves of the market and so on. And like I've told you before, some of you say, hey, I trade Nadex spreads, or, well, I trade Nadex binaries. And I always like to say I trade Nadex. I trade both. I want to look at my setups, my strategy and system, and then look at my options on Nadex and see, what is the best option for me, and I'm not going to limit myself to just one or the other. And there's a million different strategies we can talk about. Today we're going to talk a little bit about trading stock index morning breakouts with Nadex. Okay? So I just want to welcome everybody to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with apexinvesting.com. And let's go ahead and get our disclosures knocked out here so we can move forward. Trading futures options or any financial instrument involves a risk, may not be suitable for every investor. And this presentation is for educational and informational purposes only. And examples used here are not a recommendation to buy or sell, or a solicitation to buy or sell futures, options, bonds, binaries, Nadex spreads, or securities of any kind. Also, please keep in mind that any trade example that I show you here is simply an example of trying to just give you some free education here of how to use the Nadex platform, how to enter and exit orders, showing you some different possibilities. It is in no way a recommendation or suggestion of a trade. Any decision you make are your sole responsibility. So, like I said, my name is John Skelton with Apex Investing. Apex and Nadex, two complete separate companies. Nadex is an exchange. Apex, we're an online education company, a group of traders helping traders. We've got over 20,000 members. We've got strategies and systems and trade rooms, and we focus a lot on risk management and probability setups. That's why we love the capped risk Nadex products. We're traders just like you, and we're a Nadex education partner. We do these webinars to give you some free education on who and what is Nadex, what are the products they offer, how you can possibly take advantage of them. And I've been with Apex now as head of operations for about 3 years. I've got a background in banking and as a stockbroker. And again, I'm a trader just like you. I love Nadex binaries and spreads. And one of my favorite setups, and what we're going to talk about today, are breakout trades, and not just the morning breakout trades, but breakout trades in general. But I know some people have very limited time to trade, and want to talk a little bit about trading the stock indices with Nadex, and talking about the morning breakout and why do the markets, at times break out in the morning. What are some different ways you can determine the direction of that breakout? And then talk about some of the different options you can choose with Nadex. And just real quick here, for some of you that might be brand new, we're not going to be covering the basics today as far as basics of Nadex binaries and basics of spreads. We're talking more about some strategies. If you hop on over to nadex.com though, and go right here to the Learning Center, and go right here to Webinar Archive, okay? And you can go right here, filter by presenter. And if you drop this box down, and you can find us right here, Apex Investing Institute. And what this will do is help catch you up on any of the previous webinars that you might have missed. I was just talking about last week's webinar where we were talking about comparing Nadex binaries and spreads, understanding risk and reward. There's a bunch of different webinars here that you can go through and catch up. And get a good grip on some different strategies and understanding Nadex binaries and spreads. And if you're brand new, just go right back here all the way to the beginning, and or I'm sorry, to page 2. And for those of you that are just brand new to Nadex, we've even got webinars on the basics of Nadex spreads, the binaries 101, just kind of starting from the beginning. And you go through these other webinars and kind of build on your knowledge to kind of catch up to where we are today if any of this might be over your head. Okay. Also here on the Learning Center, you can go to webinars, webinar archive to find these older webinars, or webinars here to see what is coming up. Okay. Also, this webinar we're on today is being recorded, and this is the section where you can find this webinar again if you want to go back and watch it. You'll also get an email if you register for this webinar with a link to find it. Okay, so that's just where you can get a little bit of catch up and some free education there as well. So let's talk a little bit here about Nadex, and let's talk a little bit about what you can trade with Nadex. When we talk about trading, morning breakouts on stock indices with Nadex, what are your options there? Well, if we pull up the Nadex platform here, and let me just hop into a demo account real quick here. And you can hop on over here, and right here you can go to indices, binaries, or indices spreads. We'll just click binaries for now. And you'll see we've got some overseas stock indexes we could trade. We've got the China 50, the FTSE 100, which is the London Stock Exchange, the FDAX, which is the German exchange. We've got the Nikkei, the Japanese exchange. Then these bottom 4 here are U.S. stock index. All right, the U.S. Tech 100, that's the Nasdaq. We've got the U.S. 500, okay, which is the S&P. We've got the U.S. Small Cap, which is the Russell. We've got the Wall Street 30, which is the mini Dow Jones. So if you're trading, we're talking today mainly about trading the U.S. morning open, okay? And so those are the 4 different stock indices that you can trade in the U.S. Open. And you've got not only binaries, but you've got spreads as well. Okay, and if you're familiar with binaries and spreads, you can go to any one of these. Let's just click on the Dow, for example. And, in the morning, you've got plenty of options to trade. You've got weekly binaries that expire on Friday. You've got daily binaries that would expire at the end of the day today. And then you have a couple options here of 2-hour binaries. These, for example, that are open currently, go from 12 p.m. to 2 p.m. Got some others from 1 p.m. to 3 p.m. And when you click on any one of these, if we just click these 2 p.m.s, you'll also see that you've got a ton of different options, a ton of different strike prices to choose from. Okay, if you go down to the 3 p.m.s, you've got a complete different set of strike prices to choose from. And the same with dailies. And the dailies are going to be a little bit wider. And you've got weeklies. All right, and the same with indices spreads. You've got a ton of different options, different floors and ceilings, different risk reward. There is a ton of options for you with Nadex as far as what you can trade and what products you can use there, okay, to fit your strategy, your system, your risk tolerance, your account size, and so on. So you've got a ton of options with Nadex there. So let's talk a little bit about breakouts at the open. What do I mean at the open? Well, with online trading and electronic trading, you can trade all, just about 23 hours a day with most instruments out there. But when the cash market's open, when the trading pit's open, for the stock indices, that's 9:30 Eastern time, Monday through Friday typically, and that's when the pit's open. All retail traders and institutional traders, and a lot of volume is normally coming into the markets. Okay, now it's not 100% of the time. Sometimes the markets don't move right at the open. Sometimes they move like crazy. Sometimes you'll see that the times you get the most movement is from about 9:30 in the morning to say 11:30. And then, over lunchtime it might calm down, and then in the afternoon, an hour or two before the close, you might get some big moves. That's not always consistent. Sometimes the market doesn't move much, unless there's some news or whatever, or sometimes the market moves like crazy all day. But a lot of times you will see an open there, okay? And, there's a couple of things I like to do, as far as analyzing that. Let's talk about that a little bit. I like to look at a couple of different things here. Let me just pull up. Let's look at a Nasdaq chart here. Okay, and don't be confused by this chart too much. I'm going to kind of review it with you. But so, what are some things that I personally kind of look at when I'm looking to trade a morning open? Okay, well, I like to be on my computer and have my charts open in front of me, before 9:30. I want to see what has been going on before the open. Okay, what has been going on overnight? Overnight since yesterday, we've had the Australian Open and the Asian Open. We've had the European Open. What's kind of been going on overnight? Like, I don't want to just hop on at 9:30 and look at 9:30. I want to know, what is the bigger picture? Where am I coming from? What am I dealing with here? One of the other things I really like to look at is, what did the market do overnight? Not always, but sometimes you will find that if the market was kind of choppy overnight, like you see here during the European session, then, sometimes, you tend to see, hey, if it was choppy overnight, maybe I've got a bigger chance of a, kind of nice move in the morning. Sometimes you'll see that if it was huge moves overnight with Europe, sometimes it might be a little choppy at first in the morning. Okay, again, nothing's 100% of the time, but that's one of the things I want to see, is what was going on. The other thing I want to know is, what's going on with news today? Is there any news events coming out that I need to be aware of this morning that might move the market or might make the market reverse? And, something I really like to do is I like to draw what I call chop boxes, okay, or range boxes, to where if I'm looking at the market, like, okay, here's the Nasdaq just today, this morning. All right, if you see down here towards the bottom of this chart, you'll see time frames, right? So right about here, it's about 4 in the morning. If I try to find 9:30 open was, right about here. And it's real helpful for me to draw some boxes, okay? So I'm looking at the morning open, I'm looking, back overnight or back a few hours, and, where was the market? Where was the highs? Where were the lows? And, what am I really dealing with here? Not that I can't visually just see it by looking at it, but it's very helpful for me to draw these boxes to see where was the market trading during this time, before open and a few hours before, say. And I can really kind of see my levels there and know, okay, if I'm looking for a breakout or a morning breakout, I want it to not just, have the market come down a few bars or up a few bars. I want to see if it's going to break out of that range that it's been in, okay? And these chop boxes are just very, very helpful for me, okay? I also want to be aware of levels. What are support and resistance levels? What are some highs and lows of the market yesterday? If you've been with us in the past, let me just kind of take a few minutes here to explain a couple things to you on this chart here, all right? First of all, you see settlement right here, okay? You see this cyan line? That's settlement. That's where the market settled at yesterday. That's where, at the close of the day yesterday, price was agreed upon. That's where we closed out. Settlement's a very strong level, and I definitely like to see some congestion or chop around a strong level, especially settlement, okay? And where's the market going to go? This is where it closed yesterday and people agreed on price. Where is it going to go from there, up or down? You also see here like this plus 5.5 and plus 0.7. Those are deviation levels, okay? And if I scroll in here a little bit, you can see all the way down to, -1 or +1 deviation. And, the market doesn't move more than one deviation more than about 80% of the time, okay? And so it kind of just gives me a little bit of idea of some expected moves of the market. Also shows me some strong levels of the market, of where I can expect possible reversals or possible hesitations. You can kind of see right here this morning when we broke out, kind of got up here to this half deviation, kind of bounced, got up here, kind of hesitated, kind of tried to peek up a little bit, and then came back down, right? So I know I can look at these strong levels and look for possible targets of where the market might go or where I can expect some hesitation, okay? So those levels are very important. But one of the biggest indications that I personally like to use is volume, okay? If I'm looking here at, where the market has been trading at over the past few hours before open. And if I want it to break out of that, well, sometimes the market can do what's called fake breakouts, right? Like, okay, it's kind of in a range here, and then it pops up a little, and then it comes back in the range, and it pops down, and you're watching and you see it kind of pop out of that range a little bit, and you hop in and you buy a binary, or you hop in and you buy a spread, right? Thinking, okay, it's going up. No, and it comes back down, right? Or the market pops out a little bit, and oh, now it's going down. No, pops back up. Well, if it's been in this range, I don't want to necessarily enter that trade until I see it bust out of that range with some force behind it, with some momentum behind it. And volume's one of the things that I like to look at there. So I want to draw your attention real quick here, just so you have an understanding of what we're looking at, and then we're going to move forward quickly. This right here is what we call, this is an Apex proprietary indicator, is what we call VAD, V-A-D. Stands for volume accumulation distribution. All right, and notice you've got these blue, these blue bars here are up closed bars, these black ones are down closed bars. All right, and you can see here that they correlate with up and down. Notice I don't have my charts red and green, because red sometimes signifies a sell in your mind, green signifies a buy in your mind, and I want to take that emotion out of it and just look at up closed and down closed bars. Well, plenty of you have seen, for example, if we just add on real quick here, plenty of you are familiar with volume indicators, right? Volume up and down, okay? Very simple, basic indicators that you can add on to just about any chart anywhere. And that's what you see here at the bottom, okay? It shows you this, this down closed bar right here had this level of volume in it. This next one had smaller volume in it. This up closed bar had that amount of volume. It's measuring the volume in each individual bar, okay? Well, what our VAD indicator does is it measures the cumulative volume in that trend, okay, or that mini trend, or in that last X number of down closed bars. So when you're looking at just volume of individual bars, it's sometimes hard to see what's going on, right? I mean, if you look right here, you see this move all the way up. Well, if you take a look here at all the volume bars in that move up, it's kind of hard to see, well, what's really going on there. We've got some big volume bars, we've got some smaller volume bars, what's going on? So the VAD indicator kind of measures the accumulated volume in that trend, all right? And is that trend just building and building, all right? So for example, let's take a look at something here. Let's see here, real clear and simple. Right here, this move up. Well, you can see where the volume started here on the VAD indicator, and it started to build, right? Started to build. Then we had a couple down closed bars. Then this next move up, it started to build, and there was a lot more accumulated volume in there, right? Okay, everybody see that? So now that you have a basic understanding of what that indicator is and what it does, let me go back to what I'm talking about here. The market's in this range. What I'm looking for is I want to see, okay, when the market popped up towards the top of this range right here, it did it with that much volume accumulation. The next time it popped up to here, it did it with a little bit more volume accumulation. But after the market pops out of that range, and again, I don't want a little fake breakout, I want to see that it's going somewhere. What I want to look at here is I want to look and see, when did the market pop out of the range, break the highs of that range, and when did it do it with higher accumulated volume, right? While the market was chopping in this box, came to here, but then when did the accumulated volume start to break all of the previous past points and start really building and moving? Okay, and that's very easy to see. It was right here, all right? And I can see, all right, that confirms for me a little bit that breakout, and I can follow that market on up. Okay, does that make sense? Pretty simple to see what I'm looking at there. And I know several of you do breakout trading, and you look at some of these morning chops, and you may use some basic indicators on other charts. Some of you like to use MACD crosses and stochastics and CCIs, and you've got a lot of different options available to you for free on the Nadex platform charts as well, and many different ways to do this. Okay, but that's kind of the main way that I look for those particular breakouts. Okay, and let me show you a couple of quick examples of those. And actually, let me just pull this up real quick here. So I think you get the basic idea here. Just a few quick examples here I want to show you. And don't be overwhelmed by this chart, but here's a chart from a while back on the Dow, and we can see this chop box that was drawn, right? And we can see as the market's pushing down here towards the bottom of this chop box. And what do we see here on that VAD and that VAD indicator? We see right here the first push down, okay, had this amount of volume. The second push down didn't have near as much. The next push down, even less. What happens right here when the market breaks out of this chop box? Did it break with more volume than over here? No, it didn't. And look what happens. It only comes out a few bars, and then it reverses on you. See, and that's what I'm talking about with fake breakouts. And, when I see it breaking out of some chop or a range there, I want to see it pushing through with some volume. Okay? And you see it kind of broke out here, just a couple bars, and then reversed. Now let's look at the same chart here. This is the same exact chart. See, when it broke out here with less volume, it reversed on us. But what happened is the market started moving up again, breaking past the high of this box. See in the box here, this up volume in the blue, very little, and now we're building. See, it's breaking that and building when it goes past there. So that's just a quick example of what I'm looking at and how to help avoid some of those fake breakouts there. Okay, and we can even just look here. So that was the NASDAQ this morning. Let's take a look at yesterday morning, and let's see here. We've got a little bit of some chop here in the morning, and we did have, if we drew a box here, we would see that chop, and we did have it break out of the chop here a little bit with some exceeding volume, but you notice it kind of turned around on us. Now, one key thing here, notice this red level here, okay? That's a volume level. It's a high volume level. All right, one of the things I want to see happen is, okay, hey, maybe this was the chop range of the market right here, okay, at open or before open, and I do see it breaking out of that box with exceeded volume, right? This volume is much more, okay? Well, but John, why did it reverse on you there? Well, I might see it breaking out with volume, but if there's a big, strong level here, I want to see it break through that level with that same exceeded volume and then head into it, okay? Another good example, like I said, it's not just about morning, but look at the afternoon here. We had in the afternoon the market kind of chopping around a little bit, but kind of coming up and coming down and coming up, some wick bars. Well, what do we want to do? When it breaks out of there, look here. See this volume on this down move, and then look there. Okay, so if I was looking right there, I would look for a potential entry there. Okay, so just a quick overview there of what is a morning breakout and some different ways to help determine that direction. So now let's say I've got this set up. I've determined, that we've got a good breakout. What are my options? How am I going to trade this with Nadex? Okay, well, I've got various options. I've got binaries and I've got spreads. So how am I going to look to potentially trade this? All right, now, let's just say, for example, that we were looking at, let's just say this was this morning, okay? Let's just kind of pretend here for a minute that we are looking at this setup right here, okay? And let's just say that this setup was happening right now, just as an example, okay? So we've got the market breaking out. We're getting past this green level here, and I've got some good volume going north, okay? Well, how do I want to trade this? Let's say that I wanted to look at some spreads. All right. So what are one of the things I want to look at first of all? Okay, well, how far do I think the market's going to move? Okay, what are my expectations here? Well, what are some things I can look at to help determine that? All right, do I want to do a binary or do I want to do a spread? Well, I can look here and see that the market's coming off of settlement. I can see that my next strong level is up here at half a deviation, and we've got 0.7 deviation up here. I can also look back in yesterday and see that this is one of the highs from yesterday, so maybe the market could get back up to that level there, right? Another thing that I really like to use is we have, what's called our expected range indicator, okay? And I can look at that as well and pop that on there real quick, just to give you a quick example here. What that does is kind of look back, at the history of the market on, this particular day of the week, this week of the month, this time of the day. What has the market typically done? Okay. Notice these boxes here, they go, here's 10 o'clock, 11 o'clock. These boxes start at the top of the hour and end at the top of the hour. And this is kind of the high and low of, the expectation of the market, or the historical high and low of the market. So what kind of expected move could I see? If I'm looking at this trade and, the expected move over the next, hour or two is very, very small, then maybe I want to look more at a binary. If I see, hey, there's some room in here. If the market's right here around 53.60 and there's some potential for it to get up here to 53.80, that's 20 points. That's, 10 ticks per point. I mean, that's $200 on a spread. So from there, I'm like thinking, okay, maybe I've got some room here. So if I was potentially looking at that setup this morning, and I want to go to indices spreads, and I want to look at the Nasdaq, okay, and I want to pull up all of my options there on the Nasdaq. All right, well, what I'm looking at here is, all right, what is the potential move of the market? How far could it possibly go? And what are my spread options? Okay, well, if this was happening right now, I've got some spreads that are available that open up at 12 p.m. and they expire at 2 p.m. And notice I've got different floors and ceilings here. Okay, so what is one of the first things I want to think about? Okay, well, if I'm looking at my chart, I'm thinking, okay, I see here some levels, I see some previous day's highs, I see some expected ranges. So if I'm hoping that potentially the market can move up into this range, well, I want to first of all think about, okay, how much time do I want to give it? If we were live right here, okay, obviously we don't know what the market's going to do. But with my expected range boxes here, they not only plot for this hour, but for the next hour as well. Okay, and I can even extend them out to 2 hours and see, for the rest of the afternoon, what are some possible expected ranges. So the first thing I want to do is make sure, hey, I might, hope the market gets up here, but how long could it potentially take to do it? What's the expected range? What are some resistance levels? What's the volume looking like? So I want to first of all give myself enough time, right? So I'm looking at my options here for Nadex spreads. I've got some spreads that open up at 2 p.m. and expire, or 12 and expire at 2. Well, these 2 o'clock spreads only give me how much time? They give me 30 minutes. So that 30-minute time frame might not really fit into what I'm expecting the market to do and seeing on my chart, right? So maybe I want to give myself a little more time. Well, my next option here are the 1 p.m. to 3 p.m. Okay, so that gives me about an hour and a half. All right, is that giving myself enough time to be right? Well, again, I got to look back at my chart. Okay, I've got other options here that 8 a.m.s to 4 p.m.s, or I've got the daily at 4 p.m. And maybe I, say, okay, it might do it by 3 p.m., but I'd rather give myself a little more time to be right, and maybe I want to look at one of these others here, right? Okay, well then what's the next step that I would want to look at? Well, I'd want to see what are my different options here. on these different spreads, I've got different floors and ceilings, right? The spread like here, the floor is 53.05 to 53.35, okay? And so when I'm looking at, first of all, time, give myself enough time to be right, and the next, I want to look at my options here, okay, of which spread should I choose. And I don't want to just choose a spread based on risk and reward, okay? I don't want to just pop open a spread here and say, okay, just as an example, if I was to buy this spread, okay, I got to put up $91 to possibly make 209, all right? Or on, you know, one of these spreads here, if I was to, well, there's not one there. If I was to buy this one, I could potentially, ooh, I have to put up a lot more. I don't want that one. I never want to base my choice of a spread just based on how much money I have to put up or my reward. I want to look at it properly, okay? Now, in this particular example here, there's not an offer, you know, there's not an available offer for me to buy one of these spreads. But let's say there was. Where's the ceiling on this spread? Let me just make sure everybody's paying attention here. Where's the ceiling on this spread? 53.35, right? Which means I can only make money up to the ceiling or the top of the spread. Well, let's look on our chart. Where is 53.35? Well, 53.35 is down here. It's way down here. That's why there's no bid on that spread, because, you know, the spread's out of the money. The market's already past that level. If I'm looking for the market to potentially get up to this level up in here, to 53.70 to 53.80 range, and I want to capitalize the most I can on my Nadex spread, then again, the first thing I want to look at is giving myself enough time to be right, but I don't want to just randomly choose some spread that has a low amount for me to put up, right? I want it to have a ceiling that can get me the most potential profit out of that run. So I wouldn't be looking at this spread at 35 or at 50. I probably wouldn't even be looking at the 65. I probably want to look more at the 80 or the 95, right? To give myself the most room to be right. And then from there, I can look at my options. Okay, one of these two ceilings works for me. All right, if I take this spread here, I've got to put up $97 to get in the trade, and I have a max profit of 203. Okay, well, how about this one right here? Well, to get into this spread, I've got to put up 219 with a max profit of 81. Okay. So I've got some different options there to choose from, right? And then I also have to look at, well, where am I buying into the spread? Because on this particular one, okay, I'm buying in at, the market's at 53.72. I can buy it at 53.71. This one I'm buying in at 53.74, above the market. So even though this one has less profit potential overall, okay, it will start mimicking the market move right away because I'm buying closer to the market. But if I'm expecting that bigger move, then I might not mind that I'm having to put up less, have more potential, but I'm just having to get in. The market right now is at 53.72. I'm buying at 53.74, so the market's got to move up a couple points, you know, to get into where I bought the spread and then start moving with me. So I have to weigh those two options, okay? So does that make sense when it comes to spreads? When you're looking at your options there with spreads of, you know, I've seen a big mistake, people saying, oh, there's a potential setup, and, you know, I just went in randomly, and I was like, well, you know, I'm looking at these spreads here, and what are some of my options? I mean, my chart's telling me that the market's going up, right? So, you know, market's telling me it's going up, so I'm just going to buy a spread. I'm just going to buy a random spread, Okay, I mean, check out these here, closing at 3 p.m. And, you know, let's say I want to do this one right here, and I want to buy it, and, oh, I like that. I only got to put up 39 bucks. Sweet, let me place that order. Okay, well, yes, you had a pretty decent ceiling here, a potential profit, but you also only have an hour and 24 minutes. Okay, is that the right choice just because of the price? Or if you're, you know, over here at your 2 p.m.s, okay, are those the right choice? So don't just choose a spread because it's the closest expiration. Don't just choose one because of the cost to get into it. Look at your expected move, give yourself enough time to be right, and then look at your different floor and ceiling options, and then compare how much is, you know, your risk and reward is, and then where you're getting into it. Okay, so that's one of the first things that I would want to take a look at there. All right, so now I'm going to also weigh my choices of binaries, and I'm really looking at the same exact thing, right? I'm looking at my chart. I see the breakout. I see the volume breaking out, and I'm looking at the same exact thing. I'm looking at where are the levels and what is the expected move of the market over the next couple hours. And again, if we act like this was live right now, what are my options over the next couple hours with binaries? Okay, well, let's pull up binaries and let's pull up the NASDAQ. Okay, well, I've got some binaries that, again, go from 12 p.m. to 2 p.m. Okay, that's only giving me 22 minutes to be right. Okay, but what is something that I could do? Well, let's take a look at this binary right here. If I were to buy this binary right here, I would be buying it for $77.50. So I'd be putting up $77.50 as max loss, you know, if I held to expiration, with a profit potential of $22.50. But I've only got 22 minutes till it expires. So if I'm only giving myself 22 minutes, I'm not necessarily going to be taking advantage of the possible bigger move, correct? Everybody agree with that? But where is the market? Okay, well, the market right now is at 5371.4. The binary I'm buying here is at 5371. So I'm only giving myself 21 minutes to be right. But if I'm buying a binary right at where the market is right now, and I think the market's going up because I see it breaking out with volume, what has to happen in the next 21 minutes, basically, for me to be profitable on this binary? The market just has to stay right above where it is now, right? You just got to go up one tick above my strike price to be profitable. Everybody understand that? So granted, I'm only giving myself 21 minutes to be right, but I also only need one tick, 1 point, to be profitable if I'm seeing the market moving up with some volume. Does that make sense to everybody right there? Everybody see that? Okay, so that is one option for me, right? Okay, my other option is to say, okay, well, I've got my chart here and market's moving up, but the next hour out, you know, maybe the market will potentially get up into this range here. Okay, maybe it'll expire up here. So I could look and say, all right, well, let me look at my options an hour out. What's going on with the 3 p.m. expirations? Okay, well, if I want to give myself a little more time, I could say, all right, well, right now, the market's at 53.71. Here's something I can buy for $64. Oops. Okay, with a potential reward of 35. And I'm giving myself an hour and 19 minutes for the market just to stay above where it is right now and maybe mosey on up, right? So that's another option I could look at. Or I could say, well, I really do, okay, fine, the market's right here at 53.71 right now, but it's pushing with volume. I do expect it to mosey on up here closer to, you know, this, you know, closer to a higher range. Again, since we're, you know, not looking at this live, some of these numbers aren't matching up properly. But I'm expecting it to move up this way, you know. If we were looking at this morning, it'd be 53.60 up to, say, 53.70. So maybe I'm hoping for a 10-point move over the next hour. Okay? So, all right, it's at 53.70 now, but what if it got up to 53.82 range or 53.78? Right? So maybe I want to look at going a little more out of the money, where I want to get this one that's only, say, 40 or 50, you know, $50. And I want to do more of a 1-to-1 type risk-reward ratio, giving myself an hour and 20 minutes to risk 48 and make 51. Okay? Or I want to go really out of the money and I want to get this one for only $28. I mean, all I'm looking here is for it to go up from 53.73 to 53.78. That's only 5 points, right? And what I'm looking at as far as some possible expectations on my chart is more like 10 points. So I like that risk. I mean, it might not go up there, but I like that probability because I think there's a good probability it will. I like my risk to reward ratio because I can risk $27 and potentially make $72. Okay? I know for some of you that are veteran traders, a lot of this is very basic and elementary. But for some of you that might be newbies, do you kind of see how I'm walking through this? I'm not just randomly saying, oh, my chart gave me a signal to go up, so I'm just going to go randomly buy something. I'm really analyzing the chart and looking at the expectations of movement, and then I'm looking at all the options Nadex gives me. Okay? And I can even go further than that and look at the dailies and say, well, what if I just want to give it all day to finish making that move? So I think it's going to keep going. Well, then I've got, you know, some even different strikes and prices to choose from here, giving myself 2.5 hours to be right. That is the beauty of Nadex. Okay? That is the beauty of Nadex, is there's so many different options. So I'm looking at those options and I'm comparing all my different options in binaries, all my different options in spreads, and then I'm trying to look at, well, which is more comfortable for me? What fits my trading personality, my risk tolerance, my account size? Do I want to go a spread? Do I want to go a binary? Because again, a binary is limited to a max value of $100. Okay? The spread, depending on what your ceiling is, could be more, could be less. And you've got to compare those two, and then you've got to compare the amount you have to put up out of your account. Okay? So what I'm trying to do here is just get you to think out of the box a little bit, and you kind of saw how I worked through there the different time frames and expected moves. Okay? So let's talk about a couple options here real quick. I know we're going over. I just want to take a few minutes to open up your eyes to options, to help you think outside of the box and see that there's multiple options you can do here. There's multiple strategies, and there's so many options with Nadex, and you can get very, very creative. Okay, I showed you there some different options we can look at, but I know some of you are in the money binary traders. Okay, you only like trading in the money binaries, and what do I mean by that? Well, for those of you that are new, you can go back and check out some of those videos, but let me just see if I can get a good example for you here. Let's take a look here. And in the money binary, I just want to find a good example. All right, this isn't exactly what I want to be able to show you here. Okay, what's an in the money binary? Well, an in-the-money binary right here, okay, would be buying a binary for, 70 or 80 bucks. Okay, I can buy this one right here for, $72. So I'm going to risk $72. I've got a max profit of 27. Why is this so expensive, or why is it so much closer to 100 bucks? Well, it's above 50 bucks because I'm saying the market will stay above 53.68, and right now it's at 53.72. So it's already above, right? It's already above. Okay? So that is an option, and some of you love your in-the-money binaries, and I've talked a lot about them and ways to, yes, you have the option to hold it until expiration, or if the market's going against you, you can exit. Okay, and what is one of the things we know that when a binary strike is right close to where the market is, what is that binary going to be priced at approximately? At expiration, binaries were 0 or 100. So before expiration, when the binary price is right close to the strike, it's priced approximately 50 bucks, right? Okay, so Ron, for example, Ron, you were asking a question, you buy something expected to go up, it actually goes down. How do you determine, when to exit? Well, when it comes to in-the-money binaries, okay, that's one of the things that I like to look at is, okay, if I'm going to buy this for 70 bucks, what's the most I can make, Ron? 30, right? But I'm risking 70 bucks. So I'm buying this at 53.68. The market's at 53.70. So Ron, if I'm thinking the market's going up, right? If I'm wrong and it comes down, and it comes down to 53.68, if it comes down to my strike, so I can potentially make 30, right? Risking 70. If the market comes down to 53.68, meaning the market is right at my strike price, okay, like in this example here, what can I approximately sell it for and get out of it? For about 50 bucks, right? So as an example, if I was buying a $75 binary, if it expires profitable, I can make 25. If it comes down to my strike and I exit it, that's my management plan, exit it, I would be in the loss how much? 25. So I can kind of keep a 1-to-1 risk-reward ratio there, right? Now, some of you like to just hold binaries all the way to the end. Some of you are fine with, hey, I'm going to risk 75 to make 25 and I'm holding it to the end. Okay? That is a strategy as well. Okay? Some of you only like to go 1-to-1 risk-reward ratio. I want to buy around 50 and have it expire at 50. And again, the beauty with Nadex is you can hold to expiration or you can exit early. You can exit early if it's going in your direction, or you can exit early if it's going against you. Okay? For example, if I were to buy this binary right here for 80 bucks, okay, and it's going against me, I could exit it at 50, 40, 30, wherever I wanted to exit it to get out early to limit my loss, right? Or, for example, let's say I bought this binary right here for 36 bucks. Well, I can buy it for 36. If I hold it to expiration and it expires profitable, I can make how much? 63. Or I could buy it for 36, and what if it gets up to 70? And I just want to exit at 70 and take my $35 profit. I can exit early whether it's going for me or against me. Okay, so I've got a lot of different options there, right? let me throw a few things out here at you, and I'm not recommending any of these strategies. I'm just trying to walk you through, open up your eyes to all the different options with Nadex. I just showed you there, maybe an in-the-money binary, maybe an at-the-money binary, maybe an out-of-the-money binary, okay? What are some other possibilities here? Well, think about this. For those of you that like to trade in-the-money binaries, and you like to buy $75 binaries, well, you're risking 75 to make how much? 25, right? Okay, and the market moves up and you're capped at $100, right? But you're risking $75. Well, if you see this setup and you've got some good momentum and you're expecting a good little move, what if you, okay, you risk 75. What if you took this binary right here and you bought 2 of them? How much are you risking? 61. You see that? But with a profit potential of how much? 138. So in the other binary, you risk 75 to make 25. Here, you're risking 61 to make 138, right? Okay, so that's an option to look at. I'm not saying automatically just do that. I'm not just recommending something here. I'm saying, but if you're seeing and expecting a big move in the market, don't get stuck on only one way of possibly trading binaries. You've got some different options there, right? Also think about this. If you are using in-the-money binaries, risking 75 to make 25, well, what if you risked 61 to still make 25? How much would each binary have to go up in value for you to make 25 bucks on this trade? Each binary only has to go up $12.50 in value, right? I mean, before you're risking 75 to make 25. You could get 2 of these for about the same risk. As the market's going up, all that has to happen is a $12 move in the binary, because you have 2 of them, and you can get out for the same reward, right? Everybody see that? Does that make sense? Okay. What if I'm expecting a really big move? And I say, all right, what about these $15, $16 binaries, okay, where I could get 4 of them and still only be risking $64. And I'm expecting a big move in the market, even if the binaries only go up $10 in value each. I've got 4 of them. What is 10 times 4? That's 40, right? Okay, so do you see some of the different options there? And let me ask you this quick question. If I were to buy this binary right here at 53.78, okay, if the market moved up to 53.78, what is that binary going to be worth approximately? $50. So again, it's very important to understand that at-the-money pricing. Okay, so if I'm looking at my chart here and I say, hey, I really think the market's going to be able to move up those 18. I think it can get to 53.78. I don't always just have to have the mindset of trading to expiration. If I think the market's going to move up to this level of 53.78, I know that when it gets there, this binary will be approximately worth $50. So that can help me target it. If I say, hey, that's where I think the move is going to go to, let me find a strike that's there. Great. Here's 53.78. I want to buy it for $8, and I want to exit it when the price gets to $45. Buy it for 8, sell it for 45. And maybe I want to do 1. Maybe I want to do 5 and only risk $40. So again, guys, do you see how understanding these breakouts and expected moves gives you so many options with Nadex? And I just want to open your eyes to that, to think outside of the box and look at all the different ways that you could take advantage of these trades with Nadex. Nadex offers you so many options, and you have to realize it's not just about one or binary or another. It's not just about holding to expiration. You can target and exit early. You can take advantage of the moves of the market and in and out. And just, again, there's so many different ways to take advantage of this. Okay? So, again, I hope you guys can see that potential setup and ways to take advantage of it, and how to compare your different options with Nadex binaries and spreads, and looking at your different floors and ceilings, reading the market and thinking outside the box. Okay? Again, if you want to catch up on some of the past webinars and some other education, visit the nadex.com website and check out some of those previous webinars. Also, feel free to visit us over at apexinvesting.com. Got a bunch of free education, step-by-step training courses, and a bunch of different information there for you. So I appreciate everybody taking the time to be with us today, and we look forward to having you with us next time for the next upcoming webinar. So thank you so much.